I didn't get hit, it's all good.
All right. Thank you for that introduction, Kerry. That's first time for everything. So yeah, look, great to be here this afternoon. Thank you all for being here. It's fantastic to be at the first Resources Rising Stars event of 2024, and what a great opportunity it is to talk about Astute metals and our critical metals opportunities in Australia and in the US. So, what does an Astute metals investment look like? Astute's a diversified mineral explorer and mineral resource developer. Commodities are clay-hosted lithium, copper gold, and heavy mineral sands. Our main focus is on lithium-hosted clays in the United States. That's a strategic decision to go there. There's a number of benefits that lithium clays offer over other lithium deposits, and I'll talk a bit more about them later. And we've been pretty active. We set out to stake some new projects in the first quarter of last year. We've done that. We've staked them in about the middle of the year, and we've conducted some soil campaigns and generated some really nice looking targets that we're going to go out and drill shortly. So we're active in looking to create value in Nevada, and our drill rig will be on site to the second half of March, so only 6 weeks away. Closer to home here, the Georgina Basin IOCG project in the Northern Territory. It is a new copper gold province. IOCG stands for iron oxide copper gold. They're big deposits. Geoscience Australia did a lot of work in this region, spent about $40 million and established that the region was highly prospective for these kinds of deposits. And so we've been hard at work, and we've just generated a really nice target. It's got a real IOCG flavour, lots of potential, and it sits directly above an intersection of low-level copper mineralisation and low-level uranium mineralisation. So we're looking to test that in the middle of the year. Governor Broome, rounding out the projects. This is a heavy mineral sands project in southwest WA and mineral sands country. About 101 million tonnes of JORC resources. Most of that is measured and indicated, so high confidence resources. It's got great mineralogy, high value mineralogy, and we've done enough bulk test work to demonstrate that those minerals can be separated from the sand and they actually meet the spec with other products that are already on the market. So we've got a scoping study underway here, and that will be completed before the end of the current quarter. And so when you've got quality projects, you want a quality board to go with it. As a lithium explorer, you can't ask for more than having one of the founders of Pilbara Minerals as your chair. So Tony took Pilbara from what was around about a $2 and a bit million market cap right up to a $1 billion company. And it's only gone from strength to strength from there. John Young, he was also a technical director for Pilbara Minerals. Myself, I'm a geologist, 18 years experience in mineral exploration and resource development, and I've seen a number of projects go from exploration through resource development to mining. And rounding out the board is Vince Fayad. He's got over 40 years of corporate M&A, corporate finance experience. Just corporate overview, 410 million shares on issue, market cap of $13.5 million and just under $2.5 million left in the bank as of the end of December. And the top 20 shareholders hold just under 70% of the company, so reasonably tightly held. Now the good stuff. So why would you explore for lithium clay? You may not have heard of lithium clay, and I wouldn't be surprised because there's not many Australian explorers that are looking at this opportunity. But there's three main reasons. Lithium clays can produce a battery product at the mine. That battery product has a lower cost of production than when you compare it to a lot of other lithium deposit styles. And these are all large-scale deposits. So they come with the economic benefits that you get from big scale, and that is low mining costs, long mine life, and as a result, you end up with an attractive long-term investment proposition. This is an example of some outcropping claystone on one of our projects. You can see it's thick. This stuff is mapped to go for kilometres. So it can be very strike extensive, and some of the other lithium clay projects in the region have 200 plus metres thick of this stuff. They're lower grade than your pegmatite deposits that we're all comfortable with here in Australia, but they are soft, and that means that you don't necessarily need to drill and blast them, so they've got cheap mining costs and they're amenable to open cut mining. In terms of processing, the lithium is very weakly bound to the clay, and the way to liberate that is just with a simple acid leach. So you turn the clay into a slurry, you have a simple acid leach, and then it's evaporation and crystallisation, which removes the impurities, and you've got your product. You can see the global lithium resources by type. Clay fit into that little green sliver, so you can see they don't make up a big part of the of lithium projects globally, and that's because they're a relatively new deposit style and really have only been explored for substantially, really the last 5 years, with a couple of notable exceptions. And we talked a little bit about processing. If you want to take your lithium right through to a battery product like battery-grade lithium carbonate, lithium clays offer a low-cost pathway to get there. This is a lithium carbonate supply cost chart, and I've highlighted some lithium clay projects, and you can see they're situated in the lower half of the chart. That means that it costs less than, it's a lower cost to produce a tonne of lithium carbonate, battery-grade lithium carbonate, than it is a number of other projects. And these are projects from all around the world. These bars in grey are spodumene projects. So these are spodumene projects that produce a spodumene concentrate and then sell that concentrate. That's their final product. And the reason they're so much higher is because they need to be shipped to somewhere like China, where 90% of our lithium goes, and there's an additional cost to convert that to a battery product, like lithium carbonate. And not only is there additional cost in that, there's also an additional profit margin as well. So the lithium clay projects stack up pretty well. That's the current approximate spot price for lithium carbonate at the moment. It's around about $13,000 a tonne. It's not a high price environment, but what you can see is that these offer a relatively profitable scenario compared to some of the higher cost deposit styles. So even in a tough market, a lithium clay project is going to be relatively robust. And I mentioned scale. So lithium clays, these deposits up to 5.5 billion tonnes in size, huge. This is a map of Nevada, and this is the sort of the 6 main ones, or the most advanced projects, because none of them are yet in mining, although Thacker Pass is actually under construction at the moment. They contain up to 21.5 million tonnes of lithium carbonate equivalent. Long life assets, up to 40-year mine lives, that's like Thacker Pass and TLC lithium, and annual production of up to 66,000 tonnes of lithium carbonate. So even at $13,000 a tonne, that's a really healthy revenue, and that's where you start to see, if you're $700 million worth of revenue, that's where that scale's coming in and starting to impact the financials. Actually, I'll just point out those dots there, or the crosses, Red Mountain, Polaris, Altair, they're Astute Metals projects, and Cobre up in the far northeast of Nevada. And Nevada's a great place to do business, okay? So the Fraser Institute does annual surveys talking about, of resources companies about resources jurisdictions. Nevada regularly features in the top 5, and in 2022, it's the world's premier mining jurisdiction. That's for a number of reasons. So it's a mining friendly environment. There's a history of mining. Mining makes up a big part of its economy, and it's a relatively low taxation environment. The permitting process is also very transparent. So there's a lot, so people want to be doing resources in Nevada. But beyond that, the White House has actually put a lot of effort into trying to establish a domestic supply chain for lithium batteries in the US. So they don't want to rely on, spodumene that's been processed in China and has to make its way over to the US. They want domestic security of their battery metals. So they've got the Inflation Reduction Act, provides up to $7,500 of tax credits per vehicle, provided there's enough, provided the battery that's in there was A, mostly constructed in North America, and B, has a significant critical metals component that comes out of America or out of one of its cooperative countries. The bipartisan infrastructure law, there's grants for battery materials processing. American Battery Tech got a $57 million grant earlier in 2023. And ASX listed Ioneer, they got a $700 million loan at the bond rate from the Department of Energy. They have a loans program for companies that want to develop advanced technology vehicles. So when the Nevada governor at the time, Steve Sisolak, said Nevada has the opportunity to become to energy what Wall Street is to finance or what Silicon Valley is to technology, he's 100% right, because you've got all of this, plus you've got the fertile geology. All right, so we've seen why we like lithium clays. Talk a little bit about our projects. Red Mountain is one that we staked in the middle of last year. We went out on the ground and took 800 soil samples, sent them off to the lab and analysed them for lithium. We've come up with this map here, and the colours, the warmer the colours are on that map, the higher the lithium grade in the soil. We've basically got an 8-kilometre long zone of lithium anomalism above 50 parts per million, with some higher grade parts in the middle, and it's up to 2.8 kilometres wide. So 8 kilometres by 2.8, that's some big scale there. We followed that up with some rock chip samples, and I don't know if you can see them there, the individual numbers, the point numbers, up to 2,190 parts per million lithium in the clay stones that we've sampled as well. So a very prospective area. We're looking to do our maiden drill campaign there next month. Georgina, the IOCG project, this is located in the Northern Territory between the historic mining regions of Tennant Creek in the Northern Territory and Mount Isa in northwest Queensland. Historic mining districts. Geoscience Australia worked out that the area in between was highly prospective for IOCG deposits. Now these deposits are attractive because they're big. Olympic Dam, for example, that produces copper and uranium. It's been running since 1988, and Ernest Henry in northwest Queensland, it's been running since 1998. It's still worth $1 billion in 2021 when Evolution picked that up off Glencore. So these are big deposits, they have big mine lives. We've generated an excellent target here from geophysical modelling, and we're heading out there to test that in June, July. It's a nice big density anomaly, and that hole that's sitting right next to it on the cross-section on the screen intersected copper and uranium mineralisation, just like Olympic Dam. Governor Broome. So heavy mineral sands project. It's largely de-risked, got great mineralogy, 101 million tonnes of mineral resources, and we've done the bulk separation test work to demonstrate that this sand can produce individual mineral products like zircon, like ilmenite, and the rare earth containing monazite can produce a monazite concentrate as well. So this, it's reasonably advanced. It's our most advanced project, and at the moment it's subject to a scoping study that's been undertaken by TZMI, who are a world-leading mineral sands consultancy. We expect the results for that to come out in the current quarter. So, an astute investment. I said earlier, we've strategically selected lithium claystones as an exploration target because they offer a number of benefits. They produce a battery product at the mine. That battery product is produced for a low price, and they have the scale to make them a long-term, attractive investment proposition. We've got on the ground and staked 2 new projects in the last 12 months. One of those is a huge soil anomaly of over 8 kilometres long, and some rock chip samples with up to 2,000, over 2,000 parts per million lithium inside of that. We're going to go drill test that and those anomalies in March this year at Georgina in the Northern Territory. World-class copper gold potential, and we've generated a very attractive IOCG target of looks like dense rocks from geophysical modelling, nearby copper and uranium mineralisation, and we'll be permitting that and drill testing that one middle of the year. And finally, Governor Broome, a largely de-risked heavy mineral sands project, scoping study underway, that'll be coming out at some point in March. So of all these, we've got, as you can see, we've got triggers for value creation in each of our projects. We've got the money in the bank to do all of that work, and we've got a clear strategy with the expertise and the experience to carry that out and create shareholder value. All right, well, thanks for your time. Very much appreciate it. Come and see me at the booth and we can talk a little bit more about why you should buy some Astute shares.